Our next question comes from David, and David says, if I'm right, I saw that the Peterson Fund performance has been lagging SPY's performance for a quite long time. Any thoughts on that?
Yes. So few thoughts on that. I don't want to dismiss it because basically the S&P since inception has returned like 15% with dividends included. So that was a very early slide, and it's in all of our reports as well. So I can share a couple of thoughts. First of all, the S&P's long-term record is 6.8% plus inflation. Now, if you include inflation in those numbers, that's where people sometimes get to the 9 or 10% range. We are showing those numbers with absolutely zero fees, zero expenses. That is the absolute maximum that an investor would get if they put all of their capital in the S&P 500. Since inception of our fund, the S&P has been in this crazy long bull market. So the S&P is at 15% annualized. We are currently at 11.5% annualized. The challenge is that we're doing it safely. And by the way, we don't match the S&P. We're not like closet indexers. So we are doing this very strategically with a very concentrated portfolio. And it may take a little while, but I'm still confident that we are going to end up in the long term beating the S&P. Because from this starting point, and I don't want to alarm anybody, and the market can still continue to climb for some time, but we're going to have a major correction and possibly recession at some point, potentially even within maybe the Trump administration, like in 2 or 3 years. And we can't time it, but there are companies out there that are very expensive. And so the markets are kind of in a later stage, and there's a little bit of euphoria. People are pretty happy with the way that their 401ks have returned, and a lot of maybe they're just owning the index. So the challenge is, if you own the index now from this level, what has to happen to get to that 6.8% plus inflation over the next decade is like a very low average return. So maybe a 3%. It doesn't need to crash. It doesn't have to crash, but it's very unlikely for the S&P to continue growing at double-digit returns for the next decade. It's much more likely that we have some corrections, and corrections happen quite frequently every few years. So correction wouldn't be that abnormal, but I wouldn't be surprised if the markets had not moved that much higher, at least not at this speed, into 2030 and 2035. So our positions are really well diversified all over the world. We even have, as mentioned, our like private holdings of Dondo. We're doing some pretty unique things, and our positions will, like Daily Journal, a market crash won't have any long-term impact, the trajectory of where that business is headed. So even though we are still lagging, we just keep swimming. As Charlie Munger said, sometimes the tide will be with you, sometimes against you. You just keep swimming either way. So we're actually pleased to have 11.5%. I think it can be a little higher. I will point out, we went through a hard time from like 2014 to 2019. We had a couple of difficult years. We had a stagnant position with our Dondo holdings, for example, because it was a private holding. We just hold it at book value, and they were spending money to build the business. And so with 40% of our capital invested, we were just kind of like slowly losing money. And then we also had a big misstep with a fraud, which was the Horsehead Holdings, some of you may recall. So we went through some challenging times that held us back a little bit. But I think from 2018 and 2019, I mean, we're doing very well, and we're always, every year we're just getting better and better. So I'm pretty confident that we're going to be able to outperform over the next decade. And 11.5% is not a terrible return. I think, net to investors, I think people are up 350% or so over the last almost 14 years, which isn't terrible. It's actually pretty decent, pretty reasonable. So I think that will continue. I think we can continue our double-digit growth, and I think the S&P's growth will slow considerably over the next decade.